Test. Yes.
All right, everybody. Welcome to our Stoop Talk on Young Leaders in Real Estate. I want to thank everybody for being here. Thank you so much to Eli and Stephanie Zakai, our hosts. Thank you for having us in your beautiful home. And thank you to the center for helping to put all this together. So we have a really amazing young panel of young leaders who are doing unbelievable in the industry, who have so much to share and so much knowledge to impart on everybody. And I just hope that they can help motivate, inspire, and help lead people in the right direction for people that are in real estate and looking to get more involved in the business. So I'm going to ask a couple of questions that are for either for everybody in the panel or for individual panelists. And then a couple of individual questions that are specifically for each panelist themselves. You guys ready?
Yeah, ready.
All right. So the first thing that I want to ask you guys about is about your journey to how you got to where you are now. Could you tell everybody a little bit about how you got started, your journey along the way, things that changed over the course of your career, and how you got to where you are now? We'll start with Marc, who does retail leasing at KSR.
Okay. Thank you, Eddie, for putting this together, and the hosts. I started out when I was 17 or 18 as an intern at Cass & Sabag Realty, KSR. We were in like a walk-up building, 2,000 square feet, no AC, and skip forward 10 years, we're in 20,000 feet with 100 brokers. I didn't close a deal or make a dollar for 3 years while doing real estate, so it was super, super tough in the beginning. And I think what motivated me was my father decided to cut me off at like 20, sat me down, said, no more money's coming to you. And from then on, really got motivated and, skip forward now. Since that happened, I've been a part of about like 450 retail transactions. We're representing institutional funds as SL Green, RXR, and Stonehenge. And it's been quite a journey. And anything else I should add? I'm first, so I don't know what to say, what not to say, but anything else I should touch on?
Yeah, maybe just some of the challenges in the beginning, some of the exciting things that happened along the way.
So I think what was exciting was a man by name Albert Monopola used to tell me, I used to work with him, and tell me, go walk this street, that street, this street. So every single day I would go to a different block in the Bronx, Brooklyn, Queens. Some of these streets you would not walk on without a gun nowadays. And I would walk them at 7 a.m., 8 a.m., 9 a.m., till 7, 8, 9 at night. And it taught me really every corner, every street. I learned more and more about these blocks, and that's what really kind of made me who I am. So if you could really ask me any corner in the city, really throughout the 5 boroughs, and I could really tell you which tenants are in each corner. It's pretty freaky, but, the struggles, I think, the struggles with brokerage are just the ups and downs. You go 1 week, a few months, no closing deals. So it's very important to, stay consistent, persistent, and confident, and understand that it's a long-term race, a long-term career. So not a short-term career. So that's what I got to add.
All right. Thank you so much, Marc. We'll go over to Stephen Jemal, who does direct lending at S3 Capital.
Is this on? Now it is. So I started out in the industry in 2013. At the time, I was a freshman in college with our moderator. And on Fridays, I didn't have any class, so I'd go down to Deal and I'd teach tennis. And in between my tennis lessons, I'd pop into my uncle's office on Industrial Way and just paper and pen and just shadow him. And I really went there completely unannounced. And in hindsight, it's kind of funny. I was probably all sweaty from tennis. And in between phone calls, he would just cue me in as to what was going on. And that really sparked my interest in the industry. He bought grocery-anchored shopping centers, owned and operated them. That next year, I transferred over from Baruch to Yeshiva University, and all of the kids there were like hyper-competitive. It was a totally different environment. They were talking about their internships for the summer all the way in August or September. So the second I got there, I started looking for an internship that summer, and a firm called Cohen came across my desk. And I remember going in for an interview there, and the person I actually interviewed with happened to be someone that wasn't from the community and had a good interview, but eventually he said, we're looking for someone older that could eventually transition into full-time. And I know a lot of people definitely have gotten that before. So that Saturday, I went running with my uncle, and he's like, hey, I think a kid named Teddy Chatter works there, and I sold him an old Jeep a couple years back. He's like, I'll send you his digits, give him a call. And that's exactly what I did. And at the end of our call, he said, Steve, I think you're a great kid. You know, I just don't think we have space for you. It's a small office. We don't have a desk. We don't have a computer. And I remember just telling him, look, I'll just bring my own desk and my own laptop, and I'll just pop right in. And I started the next day. My first day on the job, I'm sitting in the conference room with Mayor and Teddy, and they're giving me my marching orders for the internship or maybe for the day. And I just remember Mayor getting up, and he was going over to the side of the room. He grabs a trash bin and holds it over the desk. So, you know, naturally, I think, all right, my first day on the job as an intern, they want me to take out the garbage. And I'm like, you know what, no problem, I could do that. So I, you know, grasped the garbage can, and I just remember him looking at me, and he didn't let go. So I just couldn't get it from him. So he just looked me in the eye, and he says, spit out your gum. And I haven't chewed gum ever since. In all seriousness, it was the best internship. I mean, they took me on a road trip for 4 days. I got to see all of their shopping centers, and it was really awesome. Great group of guys. That next year, I was going into my junior year, and like many young kids, they're like, look, I need to secure an internship during, you know, the summer after my junior year, or else, you know, you're going to live homeless on the streets for the rest of your life. So I made a list of like 400 firms, everywhere from like firms where people were, you know, working out of someone's garage to like Blackstone, and really guerrilla emailed like 600 people for an internship. And a firm named Marc came across my desk. They did bridge lending, they bought distressed debt, and they bought properties. And I started there. I remember that summer I was there, and I was working till midnight every single night, just trying to learn and just scrap together any deals that I could. And by the end of the summer, I felt I was learning so much more on the job, I didn't want to go back to school. So I had a talk with the school, and I didn't show up to class. I would just work all day during my senior year, and during the nights I was on the tennis team, and that's really what I did. And 2 years in, I met a gentleman named Sean Safdie, and he introduced me to the guys at Spruce S3, and we really kicked it off. And from there, I've been there since 2016, so it's been about 6 years, and I was fortunate enough to start at Fund 1. We're currently on Fund 5. We have about $1 billion out on the streets and $1.6 billion committed. We started out just lending in New York, and we ventured into northern New Jersey, South Florida, Charlotte, and Nashville, and are looking at a bunch of other hot markets. And just right place, right time, with the right people.
Amazing. Thank you, Stephen. All right, I'll pass it over to Dayan, who's the president of Truestone, just Truestone, right?
Both.
Truestone Group.
Yeah. Hey guys, thank you, Eddie. Thank you to the host. So a little bit about myself. I started when I was, back in college days. I was a math major, and they made me pick a focus in a specific business field, whether it was finance, marketing, business management, whatever it might have been. And, I chose finance. I figured it was the most relevant. Real estate was the last thing in my mind. And I pushed for a banking internship. I mean, I went through 5 different interviews with Goldman Sachs to get declined on the 6th one. And I continued pushing forward till I was able to leverage a relationship and get an internship at Safra National Bank. From there, I realized that I absolutely hated the finance world, and that was the last thing that I wanted to do with my life. And now I was graduating college, finishing an internship at Safra that I didn't want to continue with. And at that same time, my dad was getting a mortgage for his personal home, and he just really, got very close with his mortgage broker at the time at FM Home Loans. And he said, you mind calling my son, speaking to him? He's not sure what he wants to do. He's graduating college. He can't figure his things out. So she called me, and to me, like, it was just some random lady calling me at the time that was going to, try and help me like everybody claims to do. And right away she said, real estate's where you want to be. There's big dollars. It has the name. It has the things. But you have a brain, and not too many people in this industry, tie the two together. It's a lot. There's a lot of sales without the insides. And she's like, I'm going to get you an internship by this mortgage brokerage named Skyline Capital Group. And you're not going to make a lot of money, but you're going to learn a lot. And when you're done learning, then I'm going to bring you to work for me. I was like, all right, I'll try it out. I guess so. So I started working, by Skyline as a broker, but really more doing, analytical work and doing a lot of underwriting and things like that. It was a very small shop, 7, 8 employees in the entire company. We worked out of a WeWork style shared office space on Nostrand Avenue. And really from there is when, I started to want to get better at real estate and try and grow in it and not just be the standard broker. And I'd call Yael, who was, my mentor at that time, and she told me what's going to differentiate you is when you can learn the assets as if they were your own. You can treat the mortgage that you're working on as if you're buying that building yourself. Because if you're going to go to the bank and tell the bank to get, to give you a mortgage, to lend you money on that property, you need to know it better because, you're being hired to represent the building at this point. So, and from there, I really took that to heart. That same time, my dad and his company have done, a couple of investments here and there. They never purchased their own real estate ever. And he would just try and get me involved as much as he can. So anytime somebody, such as our host would send my dad a deal to invest in, he'd click the forward button. Sal, review it. Let me know your thoughts. And I'm like, I don't have any thoughts. I don't know what I'm reading. But after enough times, you start to form your thoughts. And as you start underwriting more buildings and you work on a construction loan and you work on a multifamily loan and you work on a sale, a retail shopping center loan, you have to learn the businesses because you're the middle between the underwriter of the bank and the underwriter of the buyer. And you need to bridge that gap. So you really need to understand this building pretty well. And I winged the hell out. I winged it so much, but that was part of it. And you really, really learned how to see the deal from a different, set of lens. And as that started to grow, I started to, kind of push my dad. I think we should buy our own. I think we should buy our own. I think we should buy our own. And then we started getting, we started buying up in the Bronx a little bit, a little bit in Brooklyn. Really what we did was we really focused on finding strategic partners that were experts in their specific areas and kind of piggyback on top of them and take them for a ride. And really what happened was June of 2019 hit. They changed the rent stabilization laws of the boroughs, and that was our main focus. I was at that point in my career probably spending half my day brokering with only existing clients, and I was spending my other half of the day on the properties that we had bought in at that point in time. And when we had to really take a step back and look, well, first of all, at that same time, Corona was right next door because it started right after that, and from there we realized that we were onto something. We had the knowledge, we had the power, we had the expertise, I had the relationships, I had the connections. I built everything I needed to build. We didn't have the name, we didn't have the brand, and we didn't really start going at it. And from there, we really formed the company called Truestone. And we ended up focusing on out-of-state properties in the commercial field, mainly on the office and industrial standpoints. But we always prided ourselves on being opportunistic. So anything that really made sense, and I underwrote it, and I had a partner that either I had to be an expert in the business or my partner had to be an expert in the business. But if as long as we had one of the two, we'll go with it. And obviously the deal had to make sense. And really from there, Baruch Hashem, we were able to, we boomed. I mean, thankfully we've been able to accomplish, approximately 300 million in acquisitions and about another, 50 million we put on the streets, via bridge debt. And that's really what we've been focusing on, ever since.
Amazing. Thank you so much, Sal. And then lastly, Lee Cohen from Red Hook and Partners. I'll hand it over to you.
Good job, guys. So, Eddie, thank you for putting it together. To the host, very nice. Thank you for hosting this. So, my story actually started when I first started my career. I was in wholesale, like a lot of Syrians, and I spent a couple of years building a business that was going good for years, and then we had a slowdown. I'm a little older, so I'm not that young. I have 7 kids and married, and so not that young like these 3 handsome guys to the right of me, but I was midwife. I had a wife. I had my kids, 7 kids, as of 2 weeks ago, yeah. Thank you, yeah, thank you. I actually got rid of my TV after Rabbi Meir Yedid's speech on Tisha B'Av. So I was in wholesale, and being married and having kids, you have responsibilities, and I felt like we were capped on where we could go. And I always liked real estate. The part of the wholesale business that I loved was the creativity. And I knew I wanted to get into real estate. I felt that the opportunity was endless. I felt that you could really collaborate with people, and you don't have to be competition with people like other industries. There's enough real estate throughout the world to supply everyone with a ton of money. And I said, okay, fine. I knew I wanted to get into it. I told my wife I was leaving wholesale, and I wanted to explore. At that time, it was the time when I had one of my 7 kids. And I had to go down to IKEA to get bunk beds because we were living in an apartment and we needed more space to house everybody. So I drove down there, and I was on the phone, and knowing, because I've been there a bunch of times in the time when my wife gave birth, I said I couldn't drop the call. So I started driving around the neighborhood where IKEA is. It's in Red Hook. And I felt something special in the air. I felt like it was an untapped neighborhood. You know, the rest of Brooklyn, as we know, was growing. It was gentrifying. This neighborhood was like a little sleepy town. It felt like the suburbs of Brooklyn. And I started doing research, spent a lot of time there. And I wasn't in real estate, so my entry to real estate was seeing for sale signs and calling brokers and going on Zillow and going on StreetEasy and introducing myself and paying for people's coffee to sit with me and talk to me and teach me. And I found a building that was going to be delivered vacant. And so I went with the brokers. We negotiated. I brought my father down. I said, Dad, listen, I'm switching industries. He was there for me to support me, and we bought our first building. I was like, all right, great, we're getting into this business. I went to this Israeli guy that I knew that I thought was in construction, and I'm like, all right, guy, I got a 5-unit. I'm going to Israel for Sukkot. You got to renovate it. Here's the keys, and let me know what happens. He's like, okay, where's the plans? I'm like, what's plans? And he's like, what, are you crazy? He's like, what am I supposed to do? And long story short, the journey began, right? And I think something that's, we're active developers. I think something that if anyone has an interest in getting in development, I think that a big thing that you need to have a passion for it, and you need to be able to go with the flow, be comfortable being uncomfortable, and enjoy the journey. Because in our business, it's just a constant journey. So I ended up getting plans. We started the project, got delayed, like all development sites, and we turned it into a 5-unit, and it was really a test. We turned it into a condo, so we went through the whole process of turning it into a condo, really to understand the market, because I felt that if I set the market, if I delivered a product that didn't exist in the market, then I know what the real comps are. Looking at comps from the internet is one thing, but if there's no product that you can deliver to that market, then those comps are not going to be there. So we listed the units on the market for sale. It proved correct, and then I said, okay, fine, it's a great asset. Let's list it for sale. Let's list it for rent, and let's see what happens. We ended up like doubling the average in the neighborhood on our rental, and at that moment, actually, Steven sitting next to me, his company and his firm was the first person that believed in me before I knew anything, and gave us our loan, and that was our first entry into the development game. It was a renovation. After that, as with everyone here, I could speak, I'm guessing, for everyone here, every step of the way, as long as our eyes are open, we see that it's God and it's Hashem leading us to the right places. So I happened to be in a pizza store in Williamsburg buying a kitchen for one of my properties, and I hear 2 Hasidic guys. He's like, Vos, we got to sell the property. Vos, we got to sell the property. And I'm like, okay, what do you got to sell? I'm a buyer. And he's like, we have a development site in Greenpoint, and we're trying to sell it. We got to get out of it. I'm like, all right, I want to buy it. Long story short, did the underwriting, got into the property, hired and then at that point, we somewhat knew the process. Still didn't know the process. Went into the process. That was our first ground up project. Thank God it sold out. And that was like the beginning journey of the process. After that, we did a bunch more renovations throughout the market. And then I think for us at our company, we're supported by a bunch of team members somewhere here. There you go. we had a big break. So we were eyeing a big development site in Red Hook that was owned for 30 years. We went into contract after months of negotiation, and we had an LP partner coming in with us. We had a hard deposit down, $1 million deposit down, and the LP partner 2 weeks before closing sent me a text message. I'm sorry, I'm not coming in. The LP was, I think it was a $6 million check. And I thought my life was over because I'm like, all right, I built this. We're back, I'm back alive. I'm supporting my family. I'm about to make a ton of money on this deal, and now the deal's about to fall apart. And it was the summertime, and I remember like being super depressed, and I remember my dad coming to me and he's like, listen, get up, go make kiddush for your family, go to shul, everything works out. We've all been through there. We've all been through the ups and we've all been through the downs, and you'll get through it. Saturday night, I'm going through my emails, and I get a random email from someone. Hi, how are you? We're a private equity shop. We saw you did a few small projects. We're looking to make investments in New York. Do you have any ground up projects? I thought it was like a joke, and my dad opened like a Gmail account, and he sent me the email, and he was going to figure out how to get me the money. But it was actually true. It was a very large private equity shop, which we're still doing a lot of business with. They're our leading investor at this point. And it just shows like there's always challenges, especially in real estate development and in all businesses. And at the end of the day, if we have our faith and we continue to push forward and we use our brains, then you can get through anything, and you can get through and you can achieve the things that you want to achieve. Fast forward after that project that we built, thank God at this point we've expanded down to Miami as well. We're doing ground ups in Miami. More recently, some of you may know or may not know, we're building some luxury condos on Avenue U as well, which is a very big deal for our company. So overall, just if anyone's interested in getting into the development game, it's unbelievable. It's super exciting. It's very rewarding when people give you their money to buy something that they're going to call their home. Is a very rewarding feeling. And yeah, it's been a great journey, and that's the story.
Wow. Truly incredible story. So next I'd like to dive into something, that's really important right now in the industry. One of the main things that's happening is, for years interest rates were at really, low numbers. And this year we knew that the Fed was going to start to raise interest rates, combat inflation, but I don't think anybody foresaw it happening as quickly as it has. So I'd like to ask you guys, whoever this might apply to, it doesn't need to be everybody, what effect have these rapidly rising rates, had on your business yourself, or what are you seeing in the market in terms of the way it's changed things? Whoever wants to take a stab at it.
So this really doesn't apply to me at all, so I'll probably let someone else speak. But I think I'll just touch. Are you touching on inflation at all, or is this two-part question?
Yeah, so they're directly related because rising interest rates are to combat inflation.
So I don't really deal much with interest rates, but everything is retail's the backbone. So interest rates rise, someone can make a deal work, but something that we see in retail leases a lot is CPI, Consumer Price Index. And I think the math is, it's like they take 100 commodities and they divide it on the average, and it goes up. So it means your dollar for dollar isn't what it was years ago. So a lot of landlords typically, you have 2% increases, 3% increases, your lease is going up. Now landlords want that to be CPI, or whichever is greater. CPI is at 8%, 9%. So retailers really can't sustain, if you're paying $1 million a year, your rent goes up 9%. That just doesn't make any sense. You're used to it being set 2-3%. So we learned a lot about, that's really in every single deal that we're doing. And it's a struggle that we have found. But the direct inflation has helped, in my opinion, retail leasing. Because whoever's in industrial here, I've seen industrial rents go from $15 a foot to $35 a foot. And what that means is retailers, it costs too much for them to do all the logistics. Target had a stat where they increased their sales by an enormous amount, but they didn't make a profit because the supply chain, fuel, the cost of their warehouse from $5 to $15. So how do you get a consumer to spend more and they spend less is retail. So I think the entry for tenants now are going to invest more in retail because the cost of logistics and fuel and things are too much that their customer acquisition cost is so much cheaper in retail. So we've seen a renaissance of tenants just want to go into retail. So I really can't touch on interest rates. I don't want to. I don't know anything about it, but that's you. So you talk about that.
Thanks. So I guess we're looking at it directly, like immediately it's affecting our business in a few different ways. I'd say like way number one is when I'm looking at a multifamily construction loan, we're always trying to gauge what our takeout loan's going to be. And a couple years back, like if you were lending on a multifam construction deal, and let's say someone's building to a 6 cap or a 7 cap, you knew you were money good, at your basis because rates were so low and you really weren't going to get DSCR constrained. When I say DSCR constrained, it's like the banks are eventually looking for a cushion between the annual payment and the bottom line NOI. But as rates really are starting to rise, we're starting to look at, hey, instead of seeing like what your LTV is, loan to value is, you're starting to get a feel for, hey, a bank's going to try and take you out. Are they going to be DSCR constrained? So what that's doing is causing us to kind of pull back a little bit and peel back our leverage a couple dollars, on rental construction loans. On for sale product like condos, the markets that we're seeing getting affected the most are markets which are secondary and tertiary, because those buyers don't have as deep pockets. And if I could relate that, I guess if someone's trying to buy a home to live in, not a second home, in Deal, New Jersey, that buyer might be less susceptible to interest rate fluctuations than a buyer that's eventually trying to buy a home in, Long Branch or Asbury. Because a lot of buyers, in Deal, they can put down more cash, they have more money, and they're just less sensitive to interest rates. So it's the same thing for our business. If we're lending on a condo construction loan, let's say, in Park Slope, those buyers are a lot more affluent than a buyer in Bushwick or Bed-Stuy, and we think some of those secondary and tertiary markets are going to get affected a lot more quickly. On the global scale, what we're starting to see is whenever you have a change in the market, let's say in interest rates, what happens is banks just they freeze and they stop. And what that does is, let's say you're a fund and you have capital that you need to put out, you're eventually relying on recycling your capital. So if you're seeing a bunch of payoffs that were supposed to happen and all of a sudden those banks peel back, what that eventually does is it starts to lock up liquidity. And that's certainly what we're seeing right now. There's just a lot less liquidity in the markets. And I'm speaking to a few of my borrowers and who are supposed to be taking us out, and they're like, thank God I just got my first term sheet. I've been shopping the market for 3 weeks, and I'm, $400,000 short on proceeds than what I expected, and that's, a trend that we've been seeing. And, I'm not doom or gloom. It's just that's what we're kind of seeing in the market, and I think, thank God, there's been a lot of rent growth, and a lot of that rent growth that we're seeing is eventually offsetting a lot of the rise in interest rates. But I guess that's kind of what I've been seeing in the market, and how it's directly affecting our business and how we lend.
So for us, when it comes to interest rates, really going forward, the real effect is more just kind of building in the pricing and understanding your exit. So applying a little bit of a higher interest rate to your exit. But what was really interesting was more the last 3 months while it was going up and everybody didn't know how quick, how fast, is it going to slow down, is it going to speed up? And because of all that unknown, really Wall Street, who is the biggest buyers of all these securitized notes, which moves all the money in the entire or a big bulk of the money in the market, in the debt market at least, it just really it created a lot of havoc for everybody in the industry. If you had a contract locked on any property you were looking to buy, and you were looking to get a CMBS loan, and you sign a contract in March, come May, your rates are double. Or your bank is no longer choosing to lend anymore because there's just too much unknown. And that was the key, the word unknown. Nobody knew, so everybody froze. But what if you had a hard payment down? What if you were already hard on contract? What can you do then? And we've had scenarios where very recently had to put deposits down with a bank, let the banks take us from 3.5% to 6.5%, then have to release deposits to the seller to allow us to extend, to then find another bank to work with us for another 40 days, to then that bank raise their rates another point in a week before closing, to then need to put more money down, release to the seller to get another extension, to then find a third bank that Baruch Hashem closed us last week. So it just, I think I think there's a light at the end of this tunnel, more not because the rates are going to go down, but more because we know where the rates are, and now you can just adjust your business model. And if you were shooting for 8% returns, instead of buying a 6 cap, you need to buy a 7 cap. I mean, it doesn't, the numbers are the numbers, and they speak for themselves. It's more about the market of just not knowing what's going to happen. And I think that's really how we got affected the most. But, we're definitely looking to the light at the end of the tunnel, and I think that there's going to be a lot more volume. And there were just a lot of people that had maturing loans and things like that during these last 3, 4, 5 months, and they're the ones who are getting really hurt the most, more than anybody. And, that's my take.
No? Yeah, that's me. So, we're also definitely getting affected by interest rates. I agree with what everyone said here, and Saul definitely. I think the uncertainty was, no one likes uncertainty. I don't think anyone, we all prefer a lower interest rate environment, but when you know what to expect, and then at least you can move forward. Without knowing, you can't move forward. We did 3 building renovation, gut renovations, and we had a CMBS takeout 10-year IO loan, cashing out several $1 million with, hundreds of thousands of dollars of cash flow projected on a loan that we laid out a lot of money in order to secure. And when it came time to close on it, the CMBS lender wouldn't close on it, and we had hard money that we borrowed to do these renovations. And we were put in a tough situation. Thank God everything ended up working out, and we were able to figure out alternative methods. But that was definitely a big impact to the business. And additionally, we have condos, so we have a bunch of projects where we're selling condos. And like Steve said, in certain strong markets, you're going to sell, right? I think the last 10 to 12 weeks, one with the interest rate environment just running and no one knowing what they were doing, I think everyone got freaked out. Not only the banks, buyers of condos got freaked out. And I coupled with the New York City, everyone finally able to go away, and everyone is away. Anyone with money that can close on a condo is away. But I would say over the past week and a half to 2 weeks on one of our projects, one of our larger condo projects, we've gotten more offers on condo units at asking price now, because now at least people know what the banker is saying they could actually close on, and they also back from wherever they were, and I think that now we're seeing more of a pickup. Definitely not what it was, but definitely a pickup. But interest rates definitely affect the development world.
All right, thanks everyone. So now I want to ask one question that's specific to each panelist, and then after that we'll ask one more question that applies to everybody, and then we'll open it up to questions from the crowd. So Marc, I wanted to ask you a little bit about COVID. Obviously in retail, COVID had a major effect on retail across New York, really everywhere. Could you talk a little bit about the effect that it had on you as a retail leasing broker?
Definitely. Is it working? Yeah. Let me think for a second. COVID was a blessing and also a curse, just because I had to move in with my family. I love them, but I lived alone for 10 years. It's a great experience. But the blessing that happened with COVID is it opened up so many opportunities for those that just didn't have the hustle. So I've been in the business for about 11 years, and I have amazing relationships with brokers. And during COVID, I'd email them up. I moved to Miami. I moved to Arizona. I'm hanging up the cleats. So what we did at KSR, and credit is to Abraham Caston and Morris Sabag, is every single day at 11 o'clock or 12 o'clock, every single person in the company would be on a Zoom, 75 or 100 people, and gathering information. What are you doing? What are you doing? And every day we'd have a different, literally a titan of the industry, give us advice, from the best attorney, from the largest retail owner, from the largest franchisee, understanding what they're doing in COVID, what type of rent concessions that they're giving or percentage of rent. So we took that data and we went to our clients and we helped them during that time. And what happened with COVID for us specifically is I started calling SL Green, I started calling RXR, Stonehenge, Slate. These are all institutional funds. And, 4 or 5 years ago, I was representing smoke shops and knocking on doors doing $4,000 a month deals. And skip forward now is we signed a deal this year for over $1 million. So we took COVID and we basically said we're going to double down on New York. And I say the impact that it's had on New York, retail goes in cycles every 3 or 5 or 10 years. There's been so many cycles since COVID. The trends have gone up and down. You've seen so many different types of tenants come to the market, tenants die in the market. And I'd go through markets, but residential markets have been crushing it with retail because people work from home. The Upper East Side had 33 restaurants sign. In the past 5 or 6 years before that, it had a total of 30. Office markets have been completely depleted. So we represent a lot of quick service restaurants, Chipotle and Starbucks. There's no more 5-day work week. It's a 4-day work week. So your rents can't be based on that. You have to adjust it. What else is there to talk about impacts on COVID? I don't know. I think that's really it. It's been, like I mentioned, it's been a really big blessing. And I think without COVID, KSR wouldn't be at where we are or myself if it didn't happen. So it opened up the floodgates for us to really kill. And it was awesome.
It's really incredible to be able to turn something that at face value in retail leasing you would think would be the biggest negative into the biggest positive. So
yeah,
really
and the retail rents coming down have made office tenants like dermatology groups, dental groups, medical groups that now you've seen, you go to a 3rd floor, or 5th floor, or 6th floor, go into the ground retail because the retail rents have dropped. And now you see when you walk around in the city, I'm sure you see 1 medical and City MD and 10 dental. You're like, what are these? Like, this should be an office use. It's more retailer, more companies saying, I want to build an identity because office rents and retail rents are only a 10% difference. So let me go build a company. So it's another big trend we've been seeing with medical, and it's exciting.
Awesome. Thanks, Marc.
You got it.
Steven, you underwrite a ton of deals. I'm kind of curious, what are some of the first questions that you ask when you start looking at a deal, when you start underwriting it?
Yeah. So the first question that I ask is, who's the jockey? You want to understand who the sponsor is, because you could have a great deal and not such a great sponsor, and the deal just goes sour. You got to know who the jockey is. I think that's always key. And it's the same thing if you're investing in a deal as a limited partner. You want to know who's your sponsor. The second thing I look at is where's the deal. If it's local in New York, it's we know it very well. It's eventually street by street for us, so that's a little bit easier. But let's say it's in Orlando. I guess you want to understand what the economy is. Is it a diverse economy? What's eventually running that market? Orlando's mostly tourism, right? You have Disney, you have Legoland nearby. It's a little bit less of a diverse economy than, let's say, Charlotte or Miami or Indianapolis, where you have a lot more economic streams that lead to a stronger market that's a little bit healthier and a little bit more diverse. If something happens, you want to make sure the tenants could pay rent. That's always key. And if all of their money is eventually coming from one source, it makes it a little bit riskier. So I guess the first question is, who's the sponsor? The second question I ask is where is it? And then from there, I like to understand the dynamic of that economy and what's making it tick. And you also want to understand who's that end user. So how much is if someone's doing a if someone's doing a condo deal or a rental deal, who's going to be buying those units? Who's going to be renting those units? How much money do they make? How much are they putting down if it's a for sale product? You want to understand all the way down to the retail buyer, who that buyer eventually is. And that's, I guess, kind of how I start. And, of course, there's a lot more layers to peel off the onion from there, but that's how I start.
Awesome. Thanks, Steven. So I've noticed that you've been buying a bunch of office lately, particularly a couple of Class A office buildings out in different states. Have you been making a bet that office is going to make a big comeback from the pandemic, or what's the reasoning?
I wouldn't necessarily say that I'm making a bet, but our acquisitions process is pretty thoroughly underwritten. So if we're gonna be when I said earlier that we're opportunistic, it's that we're looking for value where value can be made. And there's a lot of opportunity in the office market, but there's a lot of garbage that you need to, sift through to find that opportunity. And then, with enough diligence and enough hard work and enough underwriting and covering your exits and covering your interest rate increases and things like that. I mean, again, you do what you can, and there are people making millions in warehouses, but 5 years ago, everybody buying warehouses back then, you'd be like, really, you're buying a warehouse today? Like, what are you going to do with the warehouse? You're going to rent it for $8 a foot? And I really just that's my take on that. But more specifically to the office buildings that we have been purchasing, we're focusing on really two different areas of office, but really one type of location and style. So we're only buying in areas that are very, very affluent. We're only buying suburban. So a suburban office in an area where the average household income is north of 150,000, or probably 120 we'd go down to, but definitely not less than that. We want our executives, we want our chief level, we want all the chief level and manager level employees to be living in this neighborhood. And then we're only buying cream a la crop. Meaning we want the office that's the nicest. We want the one that has the gym. We want the one that has the grab and goes. We want the one that has the beautiful conference rooms, with the one with the lake and the views and the fountains. And that is the only thing, Marc said it earlier. The 5-day work week is gone, and we're respective of that. The hybrid is here to stay and is going to be here for a while. But the people that are going to the office, the people that want to be in the office, are the ones that have nice offices that are close to home. Those are the people that are going to the office, and that's what we're really targeting. So now you can combine that and take our two fields that we're focusing on. We're either taking the ones that have either very long leases with really strong tenants, a good income, and that's kind of allowing us to weather the storm, and we're buying that more as like a cap rate play. We're being able to deliver to our investors anywhere from a 10 to 13%, day one return in their pocket. And really growth from there, depending on your basis. Or we'll go the complete inverse of finding something in the most perfect area, built very nicely, but with massive vacancies, and then it's all a price per square footage play. We're looking to get in as cheap as we can on a price per square foot, where our basis is so low that when this gets rented, 6 months, 12 months, 18 months, 24 months, you're looking at going 3 to 4x on your initial investment. And that's really when it comes to at least offices. We are also seeking, other opportunities mainly within the industrial markets, but in terms of offices, that's what we're looking at.
Awesome. Thank you, Sal. Lee, could you talk a little bit about the process of how you source a great deal, how you raise the necessary capital, and gain investor trust needed to raise that capital?
Yeah, where's Sam Kish? Birkenstock. So sourcing a great deal as developers. So we have a very specific type of building and product that we enjoy building, and when we're looking, it doesn't only need to make sense on a spreadsheet for us. For us, our product needs to make sense within the market that we're building it. So it's really understanding markets, and when we fall in love with markets, then we hunt deals in those markets. And it's learning those markets. It's understanding who's going to buy from us or who's going to rent from us, and then going and targeting. Okay, where do we feel like the best corners are? Or it doesn't necessarily need to be the best corners. It's like, okay, if we build our building three blocks outside of the epicenter, then you stretch the epicenter of where that center is, and you deliver a product where people are going to want to be. And then for us, in terms of raising our equity, so when we first started, it was all friends and family. But what we've since learned is in the development game, because when you're investing in a development site, there is no cash flow day one. So you gotta go to Sol for that. There's no cash flow day one. So our investors are usually larger. Hopefully institutional level, which we're working publicly traded companies, so where they're okay sitting on the deal for several years before they get an exit. And for us, it's a matter, it's experience. Every time we've completed a deal, we hope that another door opens to someone that is waiting for us to continue completing deals. And for us, it's having those meetings, it's presenting. And we have had success where we're not just building random rental buildings in the middle of Brooklyn, or we're not building, hey, we got a cheap piece of land in Bushwick, so let's build it. For us, when you think of some of the biggest developers in the city, Extel related, you know what you're getting when you're getting one of their products. So, and Extel and related are two very different type of buildings when you look at this, their towers along Central Park. And for us at Red Hook, we're also, for us it's both, we're in real estate, but we're also building a brand for our product that people should come to expect. So our customers that are hopefully buying on Avenue U, we're then bringing them down to the Surfside, Bal Harbor neighborhood. So it's them following us. Or if we're in Red Hook, it's the renters that are living in our that are paying double what their other units in the market are getting. And then those people are graduating and buying the condos in those markets. That we're, and I would say so many of our renters are coming from, we have someone living in our building and they have a friend that visited them and they see the quality that we're building. For us, it's about quality. Obviously, we're here to make money. We're for profit and we're pretty good at it, but it's a matter of delivering a product that people are happy and proud to say that that's their home.
Really incredible. So I want to ask one final question for all the panelists, and then we'll turn it over to questions from the crowd. So maybe everybody start to think about what you'd like to ask the panelists. My final question is, if you had to give some general advice, a lot of people here are either relatively new to the industry or are continuing to build their career in the industry. What are some of the key things that you've learned over the years? What's some of the key advice that you would give, to people that are looking to continue to develop their career?
Don't do it. No, I'm kidding. I'm obsessed with two things in life. I think my wife is one, and my second is accomplishment. And I think if you're not motivated and want to feel accomplished and feel smart, then just give up, really. You really need to have a fire in you. And advice that I would give is we hit the genetic lottery, and I say this all the time. I'm so blessed to be in this community. I use that as a resource. I take full advantage of it. I would call anybody in the community, and I don't want to name names, but there's a lot of people that are at the highest level of this business that I harass and I meet with and I call. And I realized when I started out, I was annoying them. But then one person told me, I find more pleasure helping you and seeing you grow than doing my own deals. And I started taking advantage of that and going after another guy, and I started doing business with them. So I think that's one piece of advice is we're in the steering community, use it to your advantage. Look what Eddie's doing now, use this to your advantage. Ask people questions, get people's numbers. We're in a WhatsApp chat. It's the best thing possible, and deals are flowing from that. I think another thing is that you need goals. You need to set goals. If I'm like Steven, you need to, if I'm speaking, I guess what Steven does is you have to set, I want to close this each month. So let me speak for a second. I'm trying to think. Let me speak on myself. I set goals every single year. Each month I want to close this amount of deals, this amount of commissions, and it's a fire. And if I don't hit that, I keep it going. So I think set goals is really important. Another thing is I think I mentioned too is be confident, stay persistent, stay consistent, and don't worry about what other people are doing. In the beginning, I used to focus on this person closed a deal. I got jealous. I'm like, why didn't I do that? And then now you have traded, and you're like, oh, let's go. And then I just talk to somebody. I'd realize you're just wasting your time. Respect what they're doing, but don't be jealous. You could do it better. Don't dwell on it. Respect what they did. Call them, congratulate them. Figure out a way to do business with them. And use your resources. I think it really is so important to compound on that. So set goals each month. It's buy a house. There's a certain amount of commission, and just keep doing it, I would say. Oh, yeah, and just don't complain. Everyone has a tough life. Just don't feel bad for yourself. Just keep going. All right? That's what I got to say.
Amazing. Thanks so much, Marc. Steven, same question for you.
Sure. So I'll give a really quick story, and it leads to the lesson. So in January of 2020, our firm decided we want to expand into a few new markets, and South Florida was being one of them. So January 2020 was a really weird time. Of course, man plans and God laughs, and COVID hits. So there goes our expansion plan. Like, everything went on pause in March. But in May, we started doing, between March and May, like, I had a lot more time on my hands. The lending market was virtually frozen, and I started doing a lot of research, particularly just in, like, South Florida, like, what's running those markets, who are the players there, and, what's going on there. And whoever I'd speak with, I'd always kind of mention, yeah, we're looking to do some stuff in South Florida. So one day in May, I get a phone call from a kid just really, like, fresh out of YU. He said it himself, like, I don't even know what a cap rate is. And he's like, but I have a $70 million construction loan in Florida. And I'm like, I just remember thinking to myself, like, well, what are the odds that something's actually going to happen on this deal? But I'm like, you know what? Like, I'm a YU alum. He's a YU fresh grad. I'm like, I'm going to stay on the phone and I'll, teach him a little bit about the business. And if something happens, like, yeah, like, nothing's going to happen. So, of course, we're getting on the phone. I'm like, all right, so why don't you, like, run me through the deal, like, run me through the capital stack, and nothing ended up happening. So I'm like, look, I'll take care of you. Just put me on an email with the sponsor, and we'll see if there's something there. So he ends up putting me on an email with the sponsorship, and, all of a sudden something does happen, and the deal closes. It was a really big deal. It was our first deal in Florida. It was $70 million from a kid who just graduated school. He really knew nothing about the business, to the point where he told me on the phone, I know nothing about the business, but I got a really hot lead. And what that really showed me was just, like, listen to everybody, give everybody the time of day. And I'm sure everyone hears this a lot in their careers. It's like, everyone says, like, give everyone a chance, but, like, really, like, speak with people, give them a chance, and, like, listen to them, like, let them speak. And, like, for me, that deal opened up a lot of doors and led to a lot more deals. And, the kid learned a lot more and got a fat check at the closing, so he was happy. And it was just a good situation all around.
Awesome. Amazing story. All right, Sal.
That's how it came to me.
Hey, so for me, I would say the advice I'd give to people that are generally starting out in this business is that this business is really more of a marathon than a race, and that you really need to take it one step at a time. And, especially for people starting out, you can get an offer from somebody at, $80,000 a year starting salary, but, in 2 years from now, when you're ready to leave there and you're looking for a new job, all these new companies are going to look at you as like, but what do you do for the last 2 years? You didn't do anything. You're no different than the guy that's coming out of college. Rather than taking the job that might pay you 40, 50, that might pay you nothing, that actually can give you something to bring with you to your next job. So then you're not that newbie in 2 years from now, and you're no longer that person coming in with, without any experience, And I just feel like it's a very, very common thing today, especially with the people that I've spoken to that are in call it the 18 to 22 range, that are really, really just focusing on, I cannot make money, I can't not do this, I need to make this, they need their paycheck tomorrow, or it's not for them. And that's like the whole crypto and this, and it's just getting everybody so expectant of getting money tomorrow. But I've then spoken to so many people that were, 25 and 28 looking for a job, and I was like, so what have you done for the last 5 years? And they haven't done anything, at least not in the relation to what they want to be doing in their career, because they wanted the extra 20 grand. Or it could have been a lot more money in some instances, but it was all for the one-time sale. So I would say, the same way I started out as an analyst making $40,000 a year for 2 years, those were the best 2 years of my life, because I that's where I learned all the dirt of the business, and that dirt is really what you need to continue to grow in your own personal career and into your own growth of what you're going to end up doing in this industry.
Thanks so much, Sal. And Lee, last one up.
So the guy that gave me my first loan and believed in me actually just walked in, so I wanted to give him a quick shout out for being here. I wouldn't be in real estate if he wasn't here, Sean Safdie. So advice that I think is important, because I lived it, is when I was making the shift that I mentioned to you guys earlier from the wholesale business to the real estate business. The real estate business is big. As you can see, the four of us are in for the most part, totally different industries within the real estate business. And I think that learning the different parts of the business and choosing a path that complements your passion is something that's very important. Because for us, for our team, as developers, we hit the wall constantly. But if you love what you do, and if you're passionate about what you do, so you just get up and you keep going. Especially in my industry, if every problem rattles us, we're dead, because there's something else to do in 5 minutes from now. So I would say first things first, when you're thinking about entering into this business, understand the different channels that are in the real estate business, and try to pick one that your talents, your God-given talents, could excel in, as opposed to learning brand new talents. It doesn't, not everyone has the opportunity, but if you can get that opportunity, I think that would be great. And I think that if someone does, decide to get into the development world, I think having the attitude of, you have to be comfortable being uncomfortable. You have to feel okay when things are not perfect, and just keep going, because that's the nature of the business. And as long as you could keep plowing through it, the project will get completed. The project will, not everything runs smooth, but if you have that drive and that determination, and hopefully it's driven by your passion, then you could really get to somewhere really great.
Fantastic. Really all amazing advice. So before we wrap up, I'd love to open it up to questions from the crowd, and we'll go from there. So I saw Charles raise his hand first.
We talked about a CPI, inflation rate, and a cap. Should they all align in a good deal, or do you go for an average?
Depends who I'm representing. It's a landlord or a tenant. So one deal that we did, I signed Keton. It's a menswear brand on Madison Avenue about 2 years ago. And the landlord lived through the 70s. And he said CPI. I said, what's CPI? And he's like, you're an idiot. I said, I Googled CPI. What we did there was we did a cap of 7% on the CPI. But I represented Keton. So what I did was I freeze the rent for the first 3 years. So in the fourth year, I bet that CPI wouldn't be at what it was. So that's how I leveraged it out. But it really depends on the use, like you can't, like a restaurant can't sustain 9% jumps every year. So I think a fair cap, we just did a deal with the Nakash family, and we put a cap of like 5%, but it's only for the first few years. So every deal is case by case basis. But it really depends on the tenancy. Some tenants could afford, like Keton, they're selling $15,000 suits. CPI isn't impacting a billionaire. They could spend an extra $1,000. So I think it's just case by case. Hopefully I answered the question, but you could ask me after more. So.
All right. I saw Michael Elkarat raise his hand.
I think for me, my day is, and because it's a community event, I feel very comfortable. I feel comfortable saying this anywhere. For me, when my day starts with shul, and then learning a little, and then seeing my kids, it's a different day, because mentally, 7 kids. So it's a lot of time in the morning. It starts your day and you feel accomplished, and you feel strong before you've done but you've done everything, right? And now it's like, it's a matter of like, I'm on this WhatsApp chat with Michael Safdie, this Emunah chat, right? And every single day I listen to it, and I'll listen to the same one 7 times if I'm driving from Brooklyn to Deal, because I don't have anything else to do. And he screams at me, but it's so true, because every step of my career, and the guys that are here that are part of my team, which I couldn't do it without what we're doing, every single day the guys will come to me with like something that if it was 2 or 3 years ago, it would feel like the end of the world. But it's like, listen, Hashem has, there's a famous saying, just look back in your life. We still have food. Hopefully with God's help, we're all still healthy. So it's a matter of believing, but you can't just believe and be an idiot, right? You can't just believe and say, I'm sitting on my couch and doing nothing. You have to believe, but then you still have to do your utmost, and you have to be smart, and you have to be thorough, and you have to be serious, and you have to negotiate, and you have to be tough. But for me, it all starts with Hashem to give me that confidence.
All right. I saw that my brother Daniel had a question.
I want to go back to interest rates for a second. So ever since like 1980, 1990, interest rates have kept going. They've kept going on that lower trajectory. for like 2020, 2021, where it's at almost 0%. I'd love to get your take on not just for the next 3 months, but like 3 to 5 years from now, where you see them going. Is it still going to be getting cheaper and cheaper from where we were, or is it going to level with this point? Is there any?
I'll answer that, but I don't think anybody knows the answer to that. We're all not really, Navi'im over here. But to tell you what I feel could potentially happen is, there's a couple more meetings coming up, Fed meetings, towards the end of the year, which they're expected to raise them probably both times by about 50 bips. It could be 50 and a quarter. I mean, really nobody knows what will end up happening. I think for the next 6 months, 8 months, potentially even as far out as a year, the rates are continued to point upwards. And then from there, the Republicans, Bizrat Hashem, will take over office. And the recession's gonna become a lot realer at that point. Inflation hopefully would have tamed down by then. And, call it maybe 2-3 years in from now, you'll start to see it trend back towards, the 4 to 5%, which is probably the healthiest place, at least in my short career, where I think, business, on both sides, it ends up making sense. But again, I'm really taking a shot in the dark, so.
You shouldn't even try to guess, though. Just when you're buying something, just buy at a place where you're comfortable. Make sure you could afford it. Make sure you could afford any problems that might arise, and just don't over-lever. You can't control if they're going to go up or down. You could only control how how you're buying stuff, right?
Become a retail broker. Don't be involved with interest rates. So much easier. Look how happy I am. It's great.
All right, we have a question over here.
When you're hunt in the beginning, when you're hunting for that first deal, and maybe a week passes, a month passes, 6 months pass, whatever, 3 months, whatever it is for each individual. How do you keep yourself from that mentality, maybe it's not going to happen for me, and push yourself to I'm going to make it happen, or it's going to happen, whatever it is, whatever that place is where you're okay, I have a little uncertainty. How do you push through that to get that first, or maybe it's your second, maybe it's your 10th, whatever it is. But
I think I started out at a really blessed age. I didn't have children. I was 17, 18. I mean, I really had no expenses at all. I think it's just really staying. I don't know really how to answer the question, to be honest. It's you need to stay confident and just keep your head down. As long as you're putting in the effort every single day, it'll happen. But in between those stretches, it is tough to, you're basically living paycheck to paycheck. But as long as you expect failure, and I think we could all speak about that. I think Lee mentioned, one door closed, the other door opened, but a bigger door opened. And that happens time and time again with my industry. There's literally a signed lease with checks, and a person lights the checks up, and you see a 6-digit commission. You're like, oh my God, I just lost that. 2 weeks later, you get a call from a credit tenant at a better rent, at a better deal, and you look like a hero to both sides. So I think you have to understand that the failure that might happen to you is a blessing, and it's going to open up another window. So it's just very important to believe in emunah and betichon. And I'm not a rabbi. I just started praying 4 years ago, and it's the best thing I ever did. So. Yeah, I'd say stick to that, and I could speak more about it after with you as well.
And I'll just add a little bit to that. I think for us, I don't think a person should put all their eggs in one basket. I think that you need to be working on multiple deals, and you should be real with yourself in the chances of getting done, so that you're not chasing something that potentially not there's a difference between real hope and it actually potentially happening. And I think that if you get real with yourself, if you think that it can happen, then don't stop. And you're going to have those days. Everyone has those days, right? Or people have those weeks, right? But reset, take a day out of the office, reset, come back stronger. And then if you think that it really can happen, then don't stop until you can get it done. But I think also being real with yourself, if it's a real deal, is also good.
And also just to touch on it, is one other thought is have a focus. Learn and make your mistakes on one block or one corridor or one avenue, and stick to it. I used to always say the Patriots always won on Sunday because they planned Monday, Tuesday, Wednesday, Thursday, Friday, and they cheated, but they killed every team. But you need to do that with work also. So focus on a block and say, I'm going to be the master at this block, and no one's going to touch it. And that was the Massey-Knackle way, which they never have sold. They should never have sold, but
We're replicating that at B6.
Yes.
It's the same territory
same
system.
colors too.
South
By the
Brooklyn. If
way-
you ever want to buy or sell in South Brooklyn, reach out to me.
The way you just pointed out, that's probably the biggest issue in the industry. It's burnout. It's, you know, guys who are on the production side of the business, they just lose confidence. They get really nervous. That's probably the number one reason for people dropping out of the business. For me, when you're having a month, let's say that's slow, where the market's getting shaken up, what keeps me sane is, of course, you have to have emunah. That goes without saying. But routine. You need to have a routine every single day. It has to be the same thing. You know, you wake up, you go to shul, you pray, you go to the gym, and you need to have a punch list of what you want to accomplish that day. And completing that punch list, whether or not a deal's coming through from it or not, is going to keep you sane. And if you're just consistent every single day, just working on the same deals, you know, creating new leads and stuff's going to come through. It's about consistency, for me at least, and it's about just keeping that routine. And if you're going to keep that routine and be consistent, stuff's going to happen.
All right, I think we had one last question over here.
That's my father-in-law to the right.
So I think that, like, my nature is that. I think my nature is just like a keep going type of person. In general, I don't hold on to things. I don't stay upset with people. I don't even remember when I'm upset at people. So it's like I think it's like a lot of it has to do with, like, the start was just my nature. My nature was I'm comfortable being in uncomfortable situations. I'm comfortable going for dinner alone. I'm comfortable, like, just being like that. And then I think when I'm able to then look back, like, there was so many times that it felt like the end, that there was a new day, and we were able to continue, and we were able to get stronger from that. And that, as we build on that, like, we sit as a team, right? We have, I think, 4 or 5 of my guys are here today, and we sit, and it's not about, like, the mistake, or it's not about the problem, right? Like, I'll harp and I'll sit on something if it was negligence, but if it's just nature, so then I don't control the world. So what am I gonna? This is what I said it today. We have a deal. So in development, you have deals that crush it, you have deals that do okay, and you have some deals that are not great. And the deals that are not okay, it's like, okay, that's school. Like, how much does Harvard cost, right? But we're learning on the job, and we're in the grind, and that deal is helping us sit with a PE firm that has 20 billion under management. So these are it's like one deal's not going to kill you, or you have to at least try and make sure that one deal is not going to kill you. Okay, so you don't make as much money, and investors are not as happy as they were supposed to be. You try to limit that as much as possible, but you have to just be able to know there's a tomorrow. There's always a tomorrow, and that's I always say it. I say it to everyone. If you want to be a developer, you need to be comfortable being uncomfortable. That is the game. Because every single day there's something.
Yeah, I'll just jump onto what Lee said, because very similar to Lee, but very different. I am not like Lee. I remember the people, unfortunately, that I get upset with. And I do remember, not like that, but I remember, meaning, like, these things stick with me. And, like, for me, it was very hard to get comfortable being uncomfortable. But over time of being in the industry, you learn that there's no choice but to be comfortable with it, because every deal, every aspect of every deal has a problem, guaranteed. From the leasing to the legal to the banking to the lawyer to the contract drafting to your property management agreements, to every single part of the deal, you hit a bump, guaranteed. Some bigger, some smaller, but each one feels like it's going to be over. And how are you going to get out of this? And I don't necessarily have advice of how to do it, other than I had to learn it the hard way. And I've learned that when all these little issues arise, you just realize it's just part of the business. You take a step back, you look at the problem, you seek the problem, what's the best way to tackle this problem, and you put your foot forward, and again, and then mix that with all your bitachon and emunah and everything like that, and it's the only way to perform your business. But if you're somebody who has really trouble being uncomfortable or being in stressful situations, it's a very hard industry to succeed in, or you're going to have to just have no choice but to learn to adjust.
I'd like to add one thing. I'm not sure, but if anyone here is interested in learning more about the development game, whether it's on the acquisition side or on the project management side, you're more than welcome to come to see me or one of the guys that are on our team. We are expanding, and we are proud to say that we're trying to get to a minyan. So if anyone would like to join the team.
What's the salary?
There's no salary. We have a strict policy. There's 30 days, actually. Just one thing that we also do. No, someone mentioned it earlier. There's no salary, right? There's never salary. No, but we adopted this, and it's worked phenomenal. So Jack Towell, that's here, has been employee number one, and I wouldn't be able to be here without Jack Towell. He was there when we were able to pay salary. He was there when we had to miss many weeks and months, and he didn't say a word. But what we've done now to really learn someone that if you want to either work for someone or hire someone, I don't give anyone a salary in the beginning, especially if it's a younger guy, because you want to get to know the person. You can never get to know the person even if you do 20 interviews. The only way to get to know them is seeing them on the ground. And for us, we give everyone a 30-day trial, so we'll have anyone that wants to come potentially work with us, as long as we feel that they potentially could succeed, we'll bring them into the team and we'll let them come and learn. And we'll learn them as well, and then at that point, then obviously a salary would kick in. But it's been successful in finding great talent, and as well as not having to feel stuck to bad talent.
Amazing. Well, I want to thank everybody so much. The panelists, you guys were really incredible. I hope everybody learned a lot. I know I really did. Like Lee was saying, feel free to use everybody here as a resource and to, ask any questions that you have, any private questions, anything that applies to your career, or anybody else that you're trying to help. And thank you to the center. Thank you to the Zakais. This was really phenomenal, and I'm looking forward to.
And thank you to you, Eddie.
everybody.
Thank you for putting it
Eddie,
together.
Shabbat
Shabbat shalom.